stock market. Oh, man. Woo!
BONEST and BONEST! Corsair and Horsehair! Let foo-foo, let boo-boo! Welcome back, Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we got to talk about the stock market today. But specifically, we're going to focus on one stock. So let's go check out my Robinhood account, okay? Oh, boy. Now, VT, the Vanguard Total World Stock Market Index ETF, is up 5.4%. This is the lame ETF full of garbage international stocks that Jeremy Financial Education was hating on. Oh, what happened to your stocks today, Jeremy? Tattooed Chef is down 25% in the after hours. But specifically, Honest by BONEST actually just reported earnings. Now, if you don't know what Honest is, it's basically this skincare slash baby care slash whatever. Basically a very boring, bland, generic company that specializes in appealing to, mega liberals that want to live a clean lifestyle. I don't know, maybe take a freaking bath. So here's the Honest Company. Okay, it's now at $2.98. It's down 8.47% today. But the recent price action isn't what bothers me about this stock, okay? We're going to go look at the earnings in a second. We can see Honest is down 5% in the last week, 9% in the last month, 23% in the last 3 months, 67% in the last year, and ever since its inception, this stock has collapsed by 86 freaking percent. Not doing too hot, and there's a good reason. So here's a Form 8K that Honest filed with the Securities and Exchange Commission, and this is basically a current report that kind of highlights their Q3 financials. So let's go ahead and dig through it. I briefly skimmed through it, so it's not 100% fresh or new to me, but it's always good to read it twice. The Honest Company, a digitally native, mission-driven brand focused on leading the clean lifestyle. Oh, clean, it's a movement. Today reported financial results for the 3 and 9 months ended September 30th. Third quarter revenue growth was 2% in the quarter. Revenue growth was negatively impacted by 8 percentage points due to a prior year skin and personal care rotational program that did not repeat this year. So apparently it looks like some retailer had a product or had a product that they were selling from Honest, and they decided to drop that product. Whatever it was, don't care, okay? Third quarter consumption of Honest products grew by 6%. Accelerated growth in household and wellness categories by integrating Honest baby clothing. You can go to Target and get like generic baby clothing, or you can go to there's plenty of like used kids stores out there. They have used clothes. You get a used kid there. You can get used clothes, and they're freaking cheap, okay? Especially in inflationary times like this. Why would you go buy Honest clothes? Why would you buy like marked up diapers? Why would you buy a bunch of expensive crap when you could buy a generic version? Or if you need kids clothes, and I know this because I have to, you can just go to a store that charges like $1 or $2 for a pair of clothes. Gross margin was 30%. That's good. Better than Tattooed Chef by about 30%, reflecting a 30 basis point improvement versus the second quarter. Okay, so 0.3% up. Updates full year 2022 revenue outlook for key digital consumers inventories, blah, 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 blah. Okay, so, they talk about their various results here. So their diapers and wipes has grown by 3% year over year. Skin and personal care has gone down by 13%. That's probably because of that dropped product. And health and wellness has gone up by 115%. However, it's a very small part of their revenues. So overall, their total revenue growth year over year is 2%. So much for a growth stock there, Jeremy. So here's another big thing that I noticed. Okay, just briefly skimming through this. Their digital sales have massively collapsed. Okay. Their digital sales year over year dropped by about 14%, but they more than made up for it with retail sales. So they're focusing more on, selling to retailers and getting their products into stores, which I guess that's fine, whatever. So roughly 60% of their revenue came from retail and only 40% came from digital, when before it was almost a 50-50 split. So they're definitely going all in on the retail. Okay. Let's go look let's see what the outlook is. Updates full year 2022 revenue outlook to be in the range of $310 to $315 million. So let's go to stockanalysis.com. Let's type in honest my BONEST, and let's see how much their revenue has gone up year over year. So in 2012 or 2021, they had $318 million of revenue, and their outlook is lower. So it looks like their revenue year over year has declined. Growth, my oath. Adjusted EBITDA. EBITDA. If you see that, it's garbage. Full year EBITDA outlook remains within our range of negative 10 million. So even after all these accounting adjustments that are fake adjustments, they add back a bunch of expenses that apparently don't matter, they still have negative EBITDA. Okay. That's freaking garbage. So let's go ahead and look at the financial statements. Okay. The income statement. So they already told us some data. Gross profits roughly 30.3%, slight improvement. We can see a slight uptick in revenue. I mean, that's better than Tattooed Chef, right? They had, however, a big increase in selling, general, and administrative expenses by roughly $6 million, and it grew faster than their revenue. So overall, wait a minute. Hold on a second. Their gross profit, 25,617 divided by 84,580. Okay, 30.3%, 29,759 divided by 82,651. Their gross profit dropped. That was manipulative. Go back, look here. So their gross profit for the 3 months ended September 30th, 2021 last year was 36%. So their gross profit has actually dropped by 6%. I don't know where they got that other number from. Are they lying to me? I don't know. Okay, so gross profit has declined. I saw the numbers. I was like, that doesn't make sense. Selling and general administrative expenses have gone up. Marketing has gone down just a tad bit, and R&D has gone down. What are they doing R&D for? Lipstick? Overall, their operating loss was negative $11 million. So we have a negative 11.7 divided by 84.5, a negative 13% operating loss. Interesting there, honest by BONEST. So overall, their operating loss and their profit margin were negative 11%. And it looks like they have some dilution solution. When did they go public again? Let's see. When did they go public? Okay, so it looks like they were publicly traded before that quarter. So let's compare dilution. So far they have diluted the shareholders by, let's make it more accurate. 92.46 divided by 90.39. They've diluted by roughly 2%. So not horrible, but they are diluting you and they're losing money every year. Wow, very impressed so far. Let's look at the balance sheet. So we can see cash and cash equivalents got cut in half, roughly down $25 million. Short-term investments also went down pretty significantly from December 31st, 2021 by roughly, $26 million. Accounts receivable went up a little bit. Inventories has actually gone up. I don't know if they bought a lot of inventory or if they just can't sell it. I don't know. Prepaid expenses up. So overall, their total current assets have gone up or gone down by roughly $20 million. It just went poof, right, Jeremy? Okay. Operating leases are up. PP&E has gone down massively. I don't know if that's interesting. Their property, plant, and equipment has gone down by a massive amount in just 9 months. And I don't know if it's like really short-term assets or what, but that seems like either it's an insane amount of depreciation or they're selling fixed assets, which would be very interesting. Goodwill has not changed. Intangible assets has gone down, probably due to amortization, nothing crazy there, and other assets, whatever that means. Okay. Now, let's compare their current ratio. Their current ratio is their total current liabilities compared to their total current assets. So overall, their current ratio looks pretty decent. However, they have a lot of inventory. A big part of their current assets is inventory. So they have roughly what, $80 million in assets that can be quickly converted to cash versus current liabilities of $61 million. So overall, their balance sheet isn't the worst in the world. They're probably not going to go out of business in the next year. They can always issue more debt or borrow more money. So I'm not really concerned about that. Okay, they have operating lease, so they brought on some leases, of course. Let's see. And they have other loans. So overall, they are not underwater when it comes to their liabilities being greater than their assets. So their balance sheet at the end of the day is not the worst thing in the world. Okay, I can't really crap on it that much. However, there is a little bit of dilution. And we can see, of course, the accumulated deficit went up because they had a loss, and their additional paid-in capital went up because they issued more shares. Interesting. Now, statement of cash flows. So, in the last 9 months, Honest My BONEST has burned $50.6 million from their core operating business. They have had a net cash burn from their operations of $50.6 billion. That's up from 50 million, not billion. That's up from 36 million for the 9 months the prior year. What's the big difference here? Well, right off the bat, I can see they purchased a crap ton more inventory in the last 9 months than they did in the prior 9 months for last year. That's probably why they have that huge inventory balance. So that could just be a timing thing, but they still burnt $50 million from operations. Okay. What do they do for investing? Well, they purchased some short-term investments. I guess that's normal. They sold some short-term investments. They sold more short-term investments than they bought. So I guess they needed the cash, obviously. And they bought a little bit of property, plant, and equipment. Why did their fixed assets go down so much? That doesn't make sense. Hold on. PP&E, 52 million down to 14 million. Why? I'm really curious about that because I looked at depreciation and amortization over the last 9 months, and they only added back roughly 2. And I don't see any fixed assets being sold. I don't know what's going on with their fixed assets. That's freaking weird. You know what? Maybe it was okay. I remember this. They reclassified. Okay. I think they reclassified their PP&E into operating leases. Maybe. That's probably what they did. Because I was like, there's no way that dropped that much. Okay, it looks like they just moved this up to here. And that's why we have that increase. Okay, it's an accounting adjustment. I was like, that doesn't make any sense. Okay. So overall, what they had to do is because they burned so much cash from operations, they had to sell a lot of their short-term investments to generate $24 million of investing cash inflow to kind of compensate for that. Let's see what they did for financing activities. Taxes paid related to net share settlement of equity awards. Okay. Stock options. Yeah. Proceeds from exercise of stock options. So they got $122,000 from employees exercising stock options. Oh, more. They got 157 and 122. And then they paid a little bit of financing leases. So overall, they burned roughly $25 million of cash. Most of that came from their operations. Well, all of it did. And they had to compensate for that by selling their short-term investments. So they probably had like treasuries. They sold those to help pay for their operation expenses. And a big difference between the operating cash flow is because of this inventory purchase. So I don't know if that's doomish, but at the end of the day, even without that, they still would have burnt, I don't know, even if you take that out, they still would have burnt $25 million of operating cash flow, even if they hadn't bought this huge amount of inventory. So overall, I don't really know what to say about the stock. I mean, their gross margin is fine. You know, they're burning a lot of cash from their operations, but they're probably not going to go bankrupt within a year. They have improved their gross profit a little bit, but their operating loss has gone up. They've lost more money. And they had a little bit of manipulation there because their gross margin, when you compare the 3 months into September 30th, has actually gone down. That was a little sketchy there. So overall, I mean, like, yeah, this isn't a tattooed chef. It's not the end of the world. But at the same time, there's nothing impressive about this company. The revenue growth is garbage. It's in a highly competitive industry. It looks like they're going all in on retail. They're massively scaling down their digital sales. Or maybe they're just collapsing. I don't know. So overall, I don't know, Jeremy. I don't know what you see about this. Maybe Jessica Alba's hot. Is that why you like this stock, Jeremy? Merry Christmas! Holy smokers! Jeremy's newest video was funny. He was so happy. He must have made that early. Oh, yeah, because he must film those videos like early in the day, and then he edits them and releases them. And now he's probably crapping his pants. Oh, honest, my bonus went down, and touch and check. No. Meanwhile, VT's up like 5.4%. Oh, VT's so lame, bro. VT sucks, bro. Bullish on Jessica Alba. Jeremy needs a big pack of Honest diapers after Tattooed Chef, man. That was brutal. That was a brutal 10Q. Or it wasn't even a 10Q, just a earnings release or a preliminary earnings release. Jeremy's stock picks pull a nope after this huge rally. Isn't that hilarious? He's always talked about, when the Fed pivots, small caps are going to explode. Maybe the small cap index might do that, but that doesn't mean your crappy individual stocks that you bought are going to do the same thing, Jeremy. There's a big difference there, LaFufu. Inverse Jeremy is real. You bought some Honest? Growing that hole in your pocket. Jeremy, in his newest video, put a list of stocks he owns, and he cut out Tattooed Chef after. Of course he did. He's just going to stop talking. He's such a scammer, man. Oh, well, see, I bought Meta, and it went up, even though I'm down massively on that, too. He's down on everything. He's an idiot. Trucker Dub. Okay, conversation in the chat. So Tattooed Chef was the most innovative company since Tesla because they had many SKUs. Now Honest is the next elf on a shelf. I guess so. I don't know. Jessica Alba. Go to 4 minutes on his new video. Okay, I'll go check it out. China got a sweet deal with OPEC. China's doomed, bro. They're going to zero. Baba's going to zero, bro. Also, can you rip EM with their 511 price target that they got from their 8-pillar software? I mean, you can't put an unprofitable company in the software. It doesn't work like that. Jeremy hid the after hours for Tattooed Chef. Maybe I'll do a video on that maybe tomorrow. Wish we hadn't been tricked by Jeremy to buy this Honest trash. Funds like VT. Exactly. Dollar cost average into a broadly diversified index fund in a tax advantage account. Don't watch the market. And over time, you'll be surprised how much money you have in there. Oh, what? But I want a 10X. Wrong man is always right. I mean, you look at a clown stock, yeah, it's going to go down. Plenty of people ask Jeremy what's on with Tattooed Chef. What can he say, though? Yeah, what was the thing they're coming out with? Like, I don't even know what they called it. Like, they have these chips that are coming out. Oh, yeah, that's going to save Tattooed Chef's 0% gross margins. How do you think Jeremy's going to spin the story for Tattooed Chef? Your thoughts if he was to announce he sold a week ago? That would be a Meet Kevin moment. You remember when I started bashing Meet Kevin when he sold his portfolio? If Jeremy sells Tattooed Chef, it's on, baby. Woo, boy. But he won't do it. He won't do it. He'll buy the dip. I guarantee you. He'll make a video saying, I know times are tough, but remember Tesla. The same thing happened to Tesla. They almost went bankrupt, but then I kept buying the dip, and look what happened to Tesla. That's what he's going to do. Guaranteed. All right, that's it. I'm tired. You guys have a wonderful night. Cheers.
Holy smokers, folks.
Strong man, personal finance.
Ain't no dang jokers. Alrighty, folks, big video. So in this video, I want to address the last time I was ever bullied in life. Hey there, folks.
You're spending more of our money on those stocks. I'm gonna beat your ass.
Oh, boy.